Hey, Sean here. We're doing another live stock review. And in this video, please do not take anything as personal financial advice. Only buy and sell stocks based on your own investment goals. All right, before we dive into the first stock, I always like to start with a stock that's coming from customers offline. I want to talk about what's going on in the market right now. So let me share my screen. This will be a really helpful article I put together, actually updated recently, which is on our blog. If you go to education blog, you'll see a bunch of blog posts here, including this one, which I just updated in the last few days, historical stock market crashes. So with what's going on right now with the tariff negotiations, this is very similar to, and if you go in here, it lists over the last 100 years 17 recessions or bear markets with an average downturn of about 10 months. This tells us that when the market does pull back or go down, it doesn't last for long. And one of these in the list I added, what I'm calling the Trump Tariff War One, which was between 2017 and 2018. The market went down about 6 months. Downturn was about 7%, no impact on employment, but the cause was the same thing that's happening today. Trump is starting the tariff negotiations. This would be Tariff War Two. We are seeing the market pull back. Over the last month or so, it's about 4 or 5%. So, very similar situation. And the summary of this is do understand the market is most likely not going into a recession. It's just the tariff negotiations. I did not foresee it happening another 6 months like it did back in 17 and 18. I'm expecting something like around 3 or 4 months. We'll see if that happens, of course, but don't freak out. Don't fear sell. I'm seeing customers emailing me as we speak. In fact, over the last few days, hey, the market's going down. Should I sell at the bottom and cut my losses? I'm like, no, that would be, I'm not telling them this, but I'll say this on this call. That would be a dumb mistake. Do keep in mind these recessions or pullbacks in the market, they don't last long. As mentioned up top, 17, that's crazy. Only 17 recessions or bear markets over the last 100 years, average duration of 10 months. All right, let's jump into the first stock that was recommended. This is a pretty unique stock. This first one is Dycom Industries. And what I'm going to do is, if you're new to Tykr, I'm going to walk through this one a little slower and then we'll kind of speed things up as we go with a few other stocks. But when I look at stocks, I like to walk through what I call the seven, which is now a feature in Tykr that automates for you. We're going to do this manually and then we'll kind of, again, speed things up as we go. So this will be like looking over my shoulder to see how I use Tykr, how do I get the full power of Tykr, and I also help answer the key questions most people ask, which is, hey, when do I buy and when do I sell? All right, so let's get to it. We'll take a look at Dycom. The first thing I like to do is understand what the company does. So to do that, I like to go to the details tab and then kind of read a little bit of this description up top. So they're an engineering firm. They deal with telecom. I did a little homework offline on the company because this really intrigued me. A lot of engineering, construction, setting up really telecommunications. And if you go to their site, this will give you a really good idea. Like this video is just kind of playing on mute of what they're building. So large infrastructure for telecom. We see a cell tower here. I mean, this is a lot of hard work. Most businesses can't do this. You create a wide moat. In other words, it's hard to duplicate, but it sounds like the company, if we scroll down, when were they founded? The IPO in 84. I think I was looking on their site. They're founded in 1969. Okay, so going back a few years. So well-established business, but think telecom, construction and engineering from telecommunications. Located in Florida. I like to, so you guys know, in this section here, I like to take a look at where they're based. I'm just curious. I also like to see the IPO. I like businesses that have been public for many years because they're well established. I'm going to pause here. We're going to talk about IPO stocks real brief, and then we'll jump back into Dycom. There are people who they're looking for that new hot IPO stock. They're going to get in early and it's going to go from like $10 up to $100 in like a year. That like never happens. There are a lot of businesses that go public as a mechanism to raise money. So in other words, they run out of ways to raise venture capital, private equity, or even get loans from banks. So what do? Well, your next option is to go public. And we see too many businesses going public as penny stocks. A penny stock is anything that's between $0 and $5. There's a 99.9% chance that stock or I should say, never break out past $5. The reason is large institutions, they lose interest and they lose confidence. So that's kind of like this no-go zone. They go public at like $5 or less and they stick there forever. Anything between $5 and $10, it's very similar. Instead of 99%, it's 90%. There's still a possibility the stock can break out past 10, but it's very, very difficult. So when I see a business like this, I'm like, okay, so they went public in 1984. They've been around on the market for a while. That gives me more confidence right off the bat. So that's my starting point with stocks. Now I walk through the seven. So let's get into it. The first thing I look at is that summary. And we'll just go here so you guys can see. If you're very new to Tykr, we'll take a look at my watch list. This will give you a nice high-level overview of the different ratings in the system. So stocks are either on sale, watch, or overpriced, and only about 15% of stocks in the market make it to on sale. If you don't know the backstory on Tykr, I'll keep this real short. I created the original version of Tykr around 2015 or 16 in Excel, used it for about 4 years, and then finally turned it into a software, and the rest is history. So this tool now automates everything. The Excel sheet, it would take me like 10 minutes to analyze one stock because I'd have to copy and paste from like Yahoo Finance to this Excel sheet. And let's keep going. So we got this the summary. We're on sale, which is good. Then we have the score. This is the second step I go through out of the seven. So the score is the overall financials of the business. And you can see those financial lines here. There are 8 lines on these statements. We want to see all these lines going up and to the right or increasing, except for liabilities and debts we want to see decreasing. Biggest liability in business would be payroll. Not necessarily a bad thing if you're increasing liabilities, but you want to make sure your revenues are increasing faster than your liabilities. And then the other line to pay attention to would be debts, making sure you're paying off your bank loans. So going here, you got that score. Higher the score, the safer the investment. So you want to get over 50 here. So that's good. We're at 55. Step 3 is you go over to the margin of safety. This is the upside potential of the stock. The higher the margin of safety, the higher potential returns you can make over time. And we see here this is at 80%. And what this is driven by is one line on the financial statements. If you go to EPS, this is the number one. This is one thing to write down if you're writing anything down, is the number one most important line on the financial statements is EPS. This is earnings per share, which essentially means net income. You can see here as I toggle between the two, net income divided by outstanding shares. And this is essentially the profits of the company. To pause here for a second, there's a lot of people that believe there's a secret sauce or hidden algorithm, and the market is rigged. There'll be that language. It's none of that. It's actually much more simple than people think. And it's really, if any of you have worked into the boardrooms in companies with leadership level, think VP level, president level, C level on up, you hear, especially every quarter, because you have those quarterly reports, every quarter, the discussions are around increasing profits. I'm just looking at some of the notes here. Yeah, and one thing on a roadmap we're going to be adding is a trending alerts feature that'll be coming soon, and it'll be around IPOs, is when like an IPO stock goes from, check this out, I'll show you guys this. When you have a few quarters where it's red, it's not profitable, and flips to positive, so it is profitable, you're going to get notified. And it'll let you know about stocks that are on your watch list and off your watch list. So we want to give you a heads up of like, hey, there might be something here that's making that transition point from, let's say it's that weaker IPO stock to like, okay, something's happening. A good example of that is, let me go here. I'll show you guys. Palantir had that moment a few years back. Now let's go to financials, EPS. Check this out. This is when things get really exciting. It flips from not a profitable company to a profitable company. And at the same time, it's beating those earnings estimates, which is part of the seven. So we'll talk about those 2 points. But yeah, good call out on the chat here. All right, so jumping back to Dycom, we've got the three things checked off so far. You got that summary, score, MOS. MOS, you want to see over 50%, so far so good. Then we come to the middle and we've got the 4M confidence booster. This looks at more than the math part of investing. If you go to update stock, you will see what those mean. So let's restart here. We're already at the beginning. Perfect. All right, we've got the math part. That's what we call the margin of safety. Then we have the meaning. That's the business model and how scalable those revenue streams are. I mentioned, liabilities and debts you want to see increasing. So liabilities, if they're increasing as fast as revenue, that's not a scalable business. You want a business that can increase the revenue significantly faster than, hiring more people. We like those scalable businesses because they're more profitable, and as those profits increase, that's when the share price typically increases. All right, then we've got the moat. That's how a business compares to other companies in the same sector and industry, and then the management. All right, let's go ahead and walk through this experience. You guys can see what this looks like. We try to gamify Tykr as much as we can, makes it more interesting, more exciting, especially when you're looking at stocks. So we're going for a score between 80 and 100, and that should give us high confidence of moving forward. Of course, only buy and sell stocks based on your own personal goals. Then we got moderate. That's kind of in between. Maybe if you have high conviction, you could move forward. Otherwise, sometimes I move on to other stocks. And then we have low confidence. Anything 59 or lower, that's a pretty weak business. I do not touch it. All right, so I'll keep going here. Margin of safety is already done. Just lets us know what we're looking at. Go to continue, and let's let OpenAI go to work. So this will take like a few seconds, and it's going to summarize the business model. How does it make money? All right, as I mentioned earlier, telecommunications, construction, maintenance. There's a lot of stuff this company does, even more than what I was looking at. But thank you, OpenAI, for kind of summarizing that. Lets us know the scalability of the business. Okay, so 5.5 out of 10. It could be a little more scalable. If you think about it, though, it's a service-heavy business. So you have a lot of people building or using manufacturing construction equipment to install and build things. It's hard to duplicate, but it's really at the end of the day, you think about it, it's not really a scalable business. A good example of a scalable business is like a software business that, let's say they've got a subscription of like $99 a year. You could onboard 1,000 people or 10,000 people, and you're not going to take too much of a hit to your servers. You probably don't have to hire too many people to service that many people coming into the business. So it's highly scalable. But let's keep going. All right, we're going to continue. More on the meaning. How does the stock compare against the stock market? This is called the alpha rating. We use what's called Jensen's alpha. I won't go into detail here, but it factors in alpha and beta. Alpha essentially means how much a stock beats the market by. In this case, you can see definitely outperforms the markets. And then beta is how volatile a stock is. And a good example of that, in fact, on this screen here, I'll show you Dycom again. You can see the chart over 5 years. I like to set my charts to 5 years. But you can see here, it's not too bad, but a roller coaster ride you do not want to be on would be, let's go to GME, GameStop. This is not what you want. This is, up and down, up and down, up and down. That sawtooth is not a roller coaster ride you want to be on. So that's high beta. You want low beta. So in summary, you want high alpha, low beta. So we'll keep going through this experience here. Let's go to continue. This question here asks about how well do you know the business? Like in my case, I would say I know a lot about tech, but if somebody asks me about pharma, I'm not the resident expert on pharma. So in this case, on Dycom, not my area of specialty, but I know enough. I'm going to go ahead and put medium. All right, so then we get to moat. This section, we used to have an old 4M that was all manual. This does it all for us automatically. Thank you to OpenAI. So it kind of organizes in 5 categories to see how we line up. So we're first place for summary. Let's go to the score here. We are fourth place in this case. Okay, at 55, you can see who's ahead of us. All right, margin of safety, we are tied for first. Okay, good. Revenue scalability, yeah, we've got a few other more scalable businesses. So we're second place, tied for second. And then alpha, we are second place there. So not too bad. I think we did get one first place. So we'll keep going. That will factor in with the score at the end. All right, then we've got the management. We're almost done here. So we'll let OpenAI go to work, determine what kind of impact management has had on the company. So looking at like a 5 out of 10. All right, good to know. And then Glassdoor, we can skip this screen. Let's go ahead and click here. The reason is we added Glassdoor is, and there's a lot of sources on this, and we just grabbed one. This one from simpler.com says companies with a strong Glassdoor rating above 4 on a 5-point scale typically outperform the market. In summary, happier employees actually do produce better results in the stock market. But let's go here. Let's go to Glassdoor. I'm just curious to see. Glassdoor might give me a pop-up. Yeah, it looks like it. So I've got a 3 point and 74. I can see here. Nice. Okay, so 3.3 and 74. Could be a little better, but we'll put the numbers in place. Let's go to continue and see what we get. Okay, so we get a 72. So I'm going to go ahead and close this. We'll go back to the rating. And this is an average of the other scores. So we like to see 80 or higher as it showed within the experience. It doesn't mean it's bad in the 70s, but it's like, all right, I'm paying attention. There might be other opportunities, but we'll keep going. So we get 4 things done on the 7. The next one, the 5th thing is the 5-year chart. And I'll show you guys real quick, little pro tip here. Go to profile and then go to notifications and settings. And I like to set my charts by default to 5 years. The reason is, and let's go back to Dycom, is I like to invest in stocks that beat the market, not just 1 year, but multiple years in a row. And a good number to reference, just memorize this real quick, which is 80%. The S&P 500 typically returns about 80% over 5 years. Give or take, might be a little less, a little more. But in this case, you can see 500+%. Nice, consistent track record of beating the market. I like that, especially if I want to build my wealth faster. So we've got a few good points here already in this first tab here on the 7. We've got 2 more lines and we are done. So moving on to the EPS I mentioned earlier, we want to see 3 quarters where it's increasing. Now we did see that. We've got $2.15 up to 235, up to 239. So moving in the right direction, but it looks like here we see a decrease. Now, what causes that? The answer is typically when you're growing, like let's go to revenue here and see what we're looking at. All right, slow increase. We do see a little jump there. As you're growing, in many cases, you're going to hire more people. So that's probably what happened at this point is your liabilities, your payroll has increased, which causes your profit margins here, your EPS to decrease. Not the end of the world, but it is worth paying attention to. And then the next line here, earnings calendar. We want to see the reported beating the estimate. For context here, on Wall Street, you've got a lot of analysts working for a lot of different institutions, and they come up with a target or an estimate, and then what happens is all of those numbers are averaged to go here on what people think that EPS will be reported to be. And in this case, you can see, okay, so reported to be 91 cents came in at 117. That's really, really good. I see in many cases, I'll see like, beat by 2%, 3%, 4%. That's fine. But when you see bigger percentages like this, that's showing, really good projections. With the 7, we like to see 3 quarters where it's beating those estimates. So we definitely beat that. The last miss looks like February of 2024. Let's keep going back in time here to see when they had their last miss. Okay, that was 21. So pretty consistent. I like to see this. All right. So if we go to the 7, I think it's going to be about a 5. 5. Yeah, there we go. 5 out of 7. And the goal here is if you go here, pro tip, the 7 are the 7 easy steps to find a strong stock. The purpose is to add an extra layer of confidence to your stock research process. And we are aiming for 5, 6, or 7 out of 7. And a little hack here to save you some time, a little pro tip. Go to the stocks page and you can actually turn on, you can personalize your stocks page. You can add columns, you can turn them on and off with these little checks, and then you can change the order. You can see my order. You could take a screenshot here real quick, but I like to see company, summary, score, margin of safety, 4M right in a row, then the 7, and then 5-year returns. And then after, it's not a big deal. Some of this isn't as important to me, but I will go ahead, click apply, and then let's change this 7 filter. We're going to go 5 to 7 and see how many stocks we get. And before I do that, I want to turn off the filter. And I always like to do this. Okay, so every day the stock market is refreshing the number of stocks that are public and then stocks going back private. It's like every day it's shuffling in and out. So today in Tykr, we've got about 55,000 stocks. Interesting. Let's go here to the 7 and see what this number turns into to show you guys how hard this is to achieve even a 5 out of 7. All right, brings it down to about 1,000. All right. And let's do this. Let's even make this even more strict. We'll go 7 out of 7 and see what that gets to. 17 today. All right. Guess who's on that list? NVIDIA. Scrolling down the list, see who else is on. Some of these I recognize, some of these I do not. Okay, this is a stock I hold as well, NVMI. It's in the semiconductor industry. Real quick, I won't go into detail, but they help with the outputs of semiconductor chip manufacturing. So think about all the silicone, plastic, aluminum bits and pieces of materials. You want to take all those materials and create more chips with the same amount of product or material. There's a few other things they do as well, but that's just one. Anyway, so that's Dycom. And what I want to do is, just for fun, let's go here. I'm going to create a new watch list. We've got 3, 12, 25. And we're going to rank order the stocks that we talk about today to kind of see where they end up. In my case, what I would rank as first to last. So let's go back to Dycom. And we're going to add it. This, so you guys know, the watch list is my favorite feature in Tykr. The reason is when changes happen, especially to that summary score in MOS, you automatically get notified. It's that daily email. I call it the set it and forget it feature. So definitely use that. Build out your watch lists, add more stocks to it because your daily email is going to let you know what's going on, what's happening every day. So for example, if I'm holding an on sale stock and all of a sudden it flips to overpriced, I can make a sell move. Now, on that note, before we jump to the next stock, and I'd like you, while I'm explaining this, is go ahead, type in the chat what stock you want me to look at next. But here's the buy and sell point. We did go through this. I'm going to just make it really clear right now. And back on Tykr, I'll show you that article we talked about, the historical stock market crashes. If you go to education, the first tab here, go to investing tips. You're going to get a new tip. When you join Tykr, you get a new tip every day. Of course, you can skip them all. You can read them all in one go right here. But there's 2 really important articles that a lot of people tend to read the most, which is when to buy and when to sell. So when to buy, 2-step process when a stock is on sale or changes to on sale and has a 4M of 80 or higher. Pretty simple. So that's a good starting point. You can add a little more confidence to look at the 7 to see if it gets a 5, 6, or 7. So that's when to buy. And now let's go to when to sell. It's a 3-step process. When the summary changes from on sale to watch or overpriced, it tells us the financials are slipping. Something's happening in this business. Then next up, we got a 4M that drops to 59 or lower. That's the overall business, not just the financials. It's that meaning moat, and management. They're all slipping. Now it's time to get out. And of course, the last point here, this is thank you to Warren Buffett, which is you only sell for profit. It's called Rule One investing right here in the middle. Rule one, don't lose money. Rule two, don't forget rule one. One of my favorite quotes from Warren Buffett. So I made the decision years ago, I do not sell stocks for a loss. If they go down lower than my cost basis, or otherwise known as your average buy price, I make the decision to just wait and let the market rally, which it always does. It's going to rally and lift a lot of stocks back up. And at that point, I will sell for a profit. So that's it. That's when you buy and when you sell. Definitely check out that education section. And like I said, get those stocks added to your watch lists. Let Tykr do the heavy lifting for you. All right. I'm looking over at my screen here. Carl mentioned INSW lost 15% already, but remembering rule one and two, yeah, nice call. Thank you. And the next one is RNMBY. So let's start with that. INSW, International Seaways. Okay. I'm wondering if this is just taking a guess here. Maybe it's got something to do with transportation of goods via sea containers. Maybe not. We'll find out. So, operates a fleet of ocean-going vessels. All right, so somewhat rights for transportation of crude oil and petroleum products. International, nice. I'll talk about why that's important when I see international here. Operates two segments, crude tankers and product carriers. Excellent. This is really hard business to duplicate. Think of these giant ships. We're going to take a look at the site here, but there's other businesses I looked at like this, and just getting one ship is extremely hard, but to have a fleet is, and there's our number. I was going to look on their site to see what the number is. A fleet of 83 vessels. All right, 12 chartered in vessels. All right, I'm kind of skimming through here. Formerly known as OSG International. All right, so yeah, they're moving crude oil and petroleum around the globe. There's really no other way you can do it. You have to use these giant ships. I'm scrolling down and hitting on some of the hot points. They have a dividend call out here. So a dividend doesn't always mean, hey, go buy the stock. But what it tells me is right off the bat, they have enough free cash flow in the business to reward investors like you and I for holding the stock. That's a good place to be. You want to be in a position, you don't have to be, but it's a nice place to be. I know Warren Buffett likes dividend paying stocks, but I see like $5. So you guys know, I'll see, dividend payments of like 30 cents or 65 cents. It's like, that's fine. But when I see $5, I'm like, okay, pretty healthy business so far. All right, looks like they went public just under 10 years ago. All right, so let's go to the site. Let's just take a peek here, see what we're looking at. Yeah, this is nice. Give you the visuals on what we're dealing with. Oh, there we go. Just take that in for a second. I mean, to have a vessel like that moving product around the world is extremely hard to do. So you're already right off the bat, you've got a wide moat in your business. All right. I just want to take a look here. The fleet, this will give us probably the idea of the different ships and sizes. Yeah, nice. They really do a good job here laying this all out. DWT. I have to Google this because I'm so interested. What does DWT in carrier ocean carrier fleets mean? Deadweight tonnage. Okay, I have heard that before. A maritime term. Yes, my past experience working for other companies, moving product across seas. I do remember that phrasing before. Okay, let's go back to Tykr. And we know what the 7 is. We did walk through. Let's kind of speed things up a little bit. So we've got an on-sale stock. Great. It's over 50 in the score, so financials are pretty strong. Look at that. Margin of safety looking really healthy there. And then in the middle, 70s. It's not 80 what we want to see, but still pretty good. However, we scroll down and we do see about a 76% over 5 years as opposed to about 80. So this is keeping up with the markets. I like to see stocks that are beating the markets. We're going to go through the 7, then I'll make some comments here on the business and what this industry, just to set expectations, what we could see. All right, go to financials. Revenues are decreasing a little bit. Interesting. All right, so that ties back to that 50, what was that, a 53? We would probably see much higher if we saw the revenues increasing. Let's go to net income. EPS on the yearly, it was increasing a little bit. It has fallen off, but still it's higher than previous years and quarters to give us that higher EPS. I'm just curious here. I have to take a look at the other tabs. Free cash is declining a little bit, but still very positive. You look at these numbers here, okay, 115 million, 93 million in free cash available. That's what helps pays those dividends. You can also look at free cash as a great way to, you can buy other businesses. You can invest more in marketing and advertising. You can do more research and development is another hot area. Let's keep going here. All right. Ooh, 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 ooh. Red flag, red flag. We've got a few quarters where they're missing. So large financial institutions, and I didn't talk about this with the first stock, there's two key metrics that really drive prices up and down at those quarterly reports. And that's when your EPS increases, that's check one, and check two is you see it beating the report or the estimate. Just report beats the estimate. You hit those two things at once in one quarter. In most cases, not all cases, but in most, share prices go up. And then if you miss, share prices can go down. So we have seen the share price go down partially because of the tariffs. That's kind of driving everything down right now, the tariff negotiations. But you see this as what are we at a high of 64 down to 36? Wow, almost down 50%. And I'll talk about where this is going in a second. So you see that decreasing, and then you see these misses. That can drive stocks down. Now it can turn around. It can go the opposite direction when you hit those, like let's say EPS goes from a 73 up to, let's say it's like a $1.20, $1.50 even. That's going to drive things the other direction. That's what we want to see. And it beats an earnings estimate. That's when the stock could take off. Let's go to the 7 here. So we're at a 3. Okay. So would I invest in it right now? Maybe not. That's just my call. I'm going to add it to the watch list. But I have seen other businesses like this. This is something to keep in mind. We know as a world, a lot of energy is still used. Petroleum is still very much needed. It's not going away anytime soon. So it's still a necessity, but I have seen other businesses like LPG take a hit. It seems to be like other energy businesses, very cyclical. They go through really good times, and when good times are good, I mean they can be really good. But when times are bad, like right now, a lot of these stocks are kind of falling down. Like here's a good example of Dorian LPG definitely taking a hit. Yeah, so this International Seaways, I like the business model. Really hard to duplicate, but it's just in the industry it's in. If it were me, I would probably say, hey, let's look at other things. And like you're doing there, Carl, is, don't sell for a loss. It's like this is cyclical. It could really go through a rally, especially when the tariff negotiations come to an end, which probably in the next few months is my estimate. At the end of 24, I was kind of prepping people for, hey, just letting you know when Trump is officially inaugurated, he's probably the first thing he's going to do is probably start the tariff negotiations. And sure enough, that's what happens. And it's going to drive share prices down. My estimate was, like I said, in referencing that article I wrote, that one was 6 months, the first tariff negotiations between September of 16 through March of, September of 17 through March of 2018. It was about 6 months. This time, again, 3, 4 months is what I'm thinking. I think we're about a month in or so. So a little bit of a ride. If you can hang on, don't fear sell. Just know things like this are cyclical. So that's stock number 2. We've got 2 on our watch list. I just want to show you guys what I'm building out here. And then we're going to rank order those at the end. Let's keep going. I see. We'll circle back, Carl. RNMBY. I'm gonna grab some water here real quick. Yep, Carl mentioned dividend was what got me into it in the first place. Yeah, that dividend is, gosh, you just hold on to that. That's not a bad play in itself. It's just keep getting the dividend payments. Now, know this to anybody that's you're looking for stocks, value investing can outperform dividend investing by a long shot because of the power of compound interest. Now, as you start moving, and you'll see this if you read through our educational materials, there's really two buckets. One of the two buckets you really fall into. There's wealth building and there's wealth protection. And kind of speak on that a little bit is with wealth building, you have a timeline to retire that's typically, it can be 5 years, 10 years, 15 years, 20 years out. In that case, you want to lean more towards individual stocks. We at Tykr do recommend between like 10 and 15. That's where you can really accelerate your wealth building process. You're going to get bigger returns in the market. You want that consistent compounding. Now, if you're moving towards wealth protection, that's when we suggest, ETFs, index funds, maybe mutual funds, but keep in mind they're a little more expensive, so they'll erode into your gains over time. So if you're going to choose between the three, between index funds, ETFs, and mutual funds, I tend to lean towards index funds and ETFs. Now, with that in mind, wealth protection can also include dividend paying stocks as you hold them for the long term. And let's say you own a lot of shares, you're simply getting paid a dividend every quarter for just simply holding the shares, which is a great place to be. You don't have to sell shares to pay for your lifestyle or your hobby or whatever you want. So, dividend, I always think ahead like, hey, what if I can find a win-win where it's a strong stock that's getting good returns and a stock that pays a dividend? Because then I can just hold on to it when I reach or I'm nearing financial independence and retirement. So definitely have a read through that article there. All right, jumping back to Tykr, I saw Jeff, you mentioned you. Okay, so we've got, I see clear secure. I'm not familiar with this. Let's go ahead and take a look. Details tab right away. My starting points provides a member-centric secure identity platform. All right, multi-layered infrastructure. We'll go to their website in a second. Front end, including enrollment verification and linking. First Clear Plus, a consumer aviation subscription service, which enables access to predictable entry lanes and airport security checkpoints. Nice. Okay. Access to a broader network. All right. So it looks like it serves the airline industry. Gosh, any way you can automate the whole onboarding checkpoint security process, I'm a fan of that. Looks like an IPO was 2021, so fairly recent. Wasn't yesterday, which is good. So they got a little runway. Let's go to clear. Get to your gate. Yeah, there's the language I wanted to see right off the bat. What was that first tab? Get to your gate faster. 5x faster. Boy, I like that. I like that a lot. Okay, I have seen, I think O'Hare Airport has these. Where I'm at in Milwaukee, you've got Mitchell. I think they've got a little work to do. All right, so we know what they do. Good. Let's go through the seven, have a closer look. On sale stock, relatively low share price. We'll talk about that when we get here. We got a 55 again, so just over 50, which is good. And then the margin of safety at 80%, which is telling us the profits are increasing quarter over quarter. Got that upside potential there. All right, so just to drill into this a little bit, there are a lot of people that they'll join Tykr and they're like, Sean, hey, I really want to buy stocks that are like, around 20 bucks, 30 bucks, 40 bucks because it's a lower price and has opportunity to go much higher. That's not how the stock market works. It's this number here, fair value, is what you should be focused on. Share prices is really, it can be a relative number to anything. And what I mean by that is it doesn't matter if it's, $1,000 or $100, it's still going to move up and down the most because institutions are the ones that are moving share prices the most. They're buying hundreds of thousands on up to millions of shares in one shot, and they care about whatever the fair value is And they back into that with those 2 points I talked about, which is the EPS or are the profits increasing and did they beat their earnings estimates? So keep that in mind. When I see shares, I don't care about share price. I care about that fair value. And I know sometimes share prices can get kind of high, 500,000, 1,500, 2,000 bucks. In fact, let's pause here. I'll show you guys one. Berk, BRK, B. We've got A and B. The Berkshire Hathaway is what I'm going to. I'll show you guys this. If you take a guess right now what the share price is, um, I like to do this with people in person, but one share price, look at that, $742,000 for one share price, most relatively expensive stock in the market if you look at share price. You can also go to Berk B, BRK-B. It's got a lower entry point, so 500 bucks. But the point is, don't focus too much on share price. So we got a lower share price, but let's keep going. We got a 70 in the middle, still in the 70s, but kind of getting, we're flirting with that 60 territory. So it sounds like that meaning moat management could be a little better. Let's keep going here. This is, gosh, a little alarming here. What it tells me is the adoption, like institutions aren't really getting behind this, even though the financials are moving in the right direction. It's not really taken off like we'd like. 5-year returns a negative 37. Well, let's keep going. We'll take a closer look. Financials. Financials are picture perfect here on the revenue. That's good. Net income. Wow. Nice jump there. Really consistent. See this? Even though they're not big numbers, it's consistent. It's moving in the right direction. And then a big pop here. Look at that. It went from 23 million in net profit up to 103. That's really good. EPS will be a very similar story. So if you're ever toggling back and forth, you'll see the difference. Again, it's net income divided by outstanding shares get you that EPS. So if the outstanding shares ever change and you toggle between the two, you'll know the difference. Like, okay, so the number's a little different because of the outstanding shares. Like if you were to see this spike here, not spike as high or spike much higher, you'll know the difference. All right, jumping to earnings calendar. They had a miss, it looks like, but then a big win. Look at that, 221%. Really beat estimates. So maybe they're going to be on a new tear here where they could really start taking off. I like what you're looking at here, Jeff. You kind of caught something at that inflection point, similar to just jumping back to Palantir. Of course, no guarantees here, but I would definitely add that one. In fact, I'm going to add it to that watch list as we speak. Going back to the financials here so you guys can see what I'm looking at, is you see this transition. We kind of see something similar in Clear Secure. It's consistent and then a big jump here. If they can go, let's say it's a buck 11 here. Let's say it goes to like, 130, 140, 150, institutions might really start piling in. So very, very interesting. Very interesting. Nice find. I have never heard of this company. So I'm adding it to my watch list. Let's go to the 7 here, see what we're looking at. Yeah, three out of 7. So I would look for 5. That's just me. But in my case, this is cool because you can add it to your watch list, let Tykr let you know what's happening over time. All right, let's keep going here. Um, uh, yep, that's clear. All right, any other stocks you want me to take a look at? Otherwise, I can show you another filter here. We can find another one. Jeff, you've got INVE. Yeah, let's take a look. All right, we got a penny stock here, $3. And then you go to the chart. Yeah, this is right off the bat. You kind of, and I'm guessing here there was an IPO What is this? 2020. Um, Decent financials. Let's just go through the seven real quick. So on sale tells us overall financials are good. We're over 50, 51 there, 80% in the margin of safety, 71 in the middle. So not the 80, but moving in the right direction. And then we get down to yeah, the chart here, just gosh, that's the thing. The penny stocks, they are tempting that institutions, they're going to see this and I've even talked to buddies that have worked for financial institutions, and there's a few warnings they get. Like number one is when you're building a portfolio for customers or building an index fund or ETF, there's certain warnings like there better not be one penny stock in that portfolio. There better not be pharmaceutical stocks in the portfolio because one government regulation can cause a pharma stock to tank overnight. It's just too much risk for customers. There's stuff like that that they're warned, like you can build this portfolio, whether it's let's say it's an industrial portfolio or, a US mid cap portfolio, which can span multiple industries, but there's certain things you can put in and certain things you can't. Penny stocks, unfortunately, yeah, they don't get a lot of attention. Institutions don't really drive up those share prices, but we'll keep going here. Financials, yeah, look at that. Revenue, boy, really falling off. Net income is really increasing now, so maybe they are cutting payroll. Let's go to balance sheets, liabilities. Yep, there you go. That's the answer. They are laying off people. Most likely that's the play to drive up those profits. EPS or earnings calendar, they had four misses in a row, but then they are beating. That's all right. Let's go to the seven. They're another 3 out of 7. Let's go to three. We're gonna add that to the watch list. I did not look at this. This is where I usually go. Uh, Security technology company that secures things data, physical places in America to Europe. Okay, two segments, identity and premises. All right, so it sounds like cybersecurity. Yep, cybersecurity. And I like cybersecurity. Gosh, it's just unfortunate. They went public probably a little too early. I remember I'll share a short story for you guys. I was actually going through an airport of all places, and I sat down next to a gentleman, and we're talking about what we do for work, and we're talking about Tykr, and he was saying that he could take Tykr public as a penny stock, and my response to that was, he's like, you can make a ton of money and take it public, and I'm like, that would be a disservice to my customers, my investors. And he kind of looked at me cockeyed, like, you care about that? And I'm like, yeah, because you want to wait longer. I told him the Palantir story. You want to wait like Palantir waited 17 years, give or take, to go public. Because you want to wait for your financials to be strong enough. Then when you go public, you're doing a service to your investors. But I see too many people, uh, they'll go public and yes, the CEO and founders and whatnot, they'll get their big payday, but unfortunately, too many of their customers and investors, they'll come in, they'll buy it thinking it's taken off, but it'll sit here for way too long. It's a big risk, and I see this happening too much. So yeah, Tykr ever decides to go public, it'll be when we're really financially strong. So when we do, we drive that share price well north of $10. All right, that one we've got added. All right. Think sold a business division and are reorganizing. They think they sold a business division and reorganizing. Yeah, that could be happening there on jumping back to Identiv. Yeah, good point. I would have to do more homework in the company, know the details like you, Jeff. Um, all right, I'm going to circle back to the top. I know. Carl, you mentioned RNMBY. I want to get one more in here. I really like this. You guys brought a lot of stocks I've never looked at before. Usually I get the usual suspects like Palantir, Tesla, Apple, and that's fine. I don't mind looking at those, but this is a lot more interesting. All right. So this is yeah, Rheinmetall. I have seen this one before. Holy smokes, I just took a look at this number here, 1,000%. All right. I need a little refresh in what they do. All right. Technology to mobility and security sectors worldwide. I think they're, yeah, and last time I checked, yep, weapon, they're in the defense space. Vehicle systems, weapons, ammunition, electronic solutions, sensors, actuators. Yes, I did a little homework on this one a while back. Country based out of Germany. All right. IPO back in 2012. Let's take a look at their website, see what they're working on. Rheinmetall. Cool name. All right. So, real quick pro tip here. If you ever want to learn about a company real quick, I'm always looking for products or services. Something along those lines, give me an idea. What are they doing? Like, who do they serve? What do they do? How do they make money? Let's go to systems and products here. Okay. So we know mobility is big, industry, hydrogen. All right. So not just military. That's nice. Making money in other areas. That's a good place to be. You have a lot more revenue streams then. All right. Air defense. Yeah. All good stuff. Pretty straightforward. So let's take a look here. On sale stock. I mean, we got some impressive numbers here right off the bat. 87. Here's a much difference. I mean, we are over 50, just over 50 in a few of the past stocks, but 87 really tells us most of those numbers are moving up. All right. Then 80% on the margin of safety. Here's an example. Share price is 241. Some people can be intimidated by this, but this is the number to focus on. Over $1,000. Fair value. 4M finally above 80. This is great. This is what we're looking for. And then we get down to the bottom, beating the market by a long shot. Yeah, I'm looking here. Gosh, really nice increase over the years. Wow, very impressive. Don't see too many stocks getting 1,000% over over 5 years. Let's keep going here. Financials. Let's go to that EPS. Big spikes. Looks like every December. Wonder what's going on there. Typically, I see that with retail, like your Amazons and Walmarts and Targets of the world, where you get your Black Friday sales, everything comes in, and you get a great fourth quarter. This is interesting. Wonder if military is making big orders at the end of the year. I'd have to do more homework there, but still, we see the spike, then it drops off, and then it's increasing again. That's a nice trend. Cash flow, just curious. Okay, kind of fell off a little bit, but still positive. And then I'll keep going here. Assets, nice steady increase. Liabilities. Okay, so probably hiring more people, slow and steady. Debts. All right, paying off your debts. That's good. And then equity. Equity and assets, if you guys are curious, they can be very similar in how they increase. So slow and steady on both. So looking good. Earnings calendar. We don't have the EPS estimates here. We are going to be upgrading our data provider here this spring, summer. We'll start in spring, hopefully get it delivered in summer, but it'll give us a lot more stocks, ETFs, even mutual funds, and we'll get more data points like this. So this stock might give us a 6 just by default. We don't have those earnings. So far, this is the strongest in the bunch. So let's go here we'll kind of do a roll up and just my thoughts. And I like to kind of rank by the 7. I want to see what we look like here. So yeah, Rheinmetall I put as, yeah, this is what I was thinking for the order. Rheinmetall, military, tech, um, Dycom supporting the telecom industry. I do like the industry here, so I actually, gosh, based on the industry, I know these returns are massive on Rheinmetall. That's probably a tie between the two, pretty close in my opinion. And then International Seaways, very cyclical, moving petroleum around the world. But they could see a nice rally here. I could see that industry seeing it. And then Clear Secure, airports efficiency, and then Identiv. I think they got to get a little further ahead. The big issue there is that share price is in that penny stock range. That's a big risk, and 99% chance it's never going to break out past there. Small chance it may, but you're going to need institutions to get behind it in some way, shape, or form. And you got to move heaven and earth on that one. All right. So that's kind of how I'd rank them is how you guys see here. You take a screenshot, of course, only buy and sell stocks based on your own personal financial goals, but really like what you got going on. And then a quick, all right, I should say, really like what you guys provided to me today. Again, I like to find these hidden gems. There's a lot of opportunities out there, and it's nice to have the community bringing them to the table to say, hey, here's a stock you might not be looking at, Sean. Maybe take a look. A quick heads up, broker connections coming very soon. We started working on this week. And if you're curious here, let me show you the screen to see if you guys, if your broker is on the list. We'll just go to Tykr and then go to the footer and you'll see broker connections. We'll be partnering with a company called SnapTrade. They already have the connections set up. You can see the list here. In my case, I do use Schwab, but a lot of the usual suspects. You got E-Trade, Fidelity, Chase. Big ones around the globe include Interactive Brokers. You can see Robinhood is there as well. Scrolling down, Vanguard. Webull is really big in Europe, or 20 million users. Rhoda is big in India. A lot of good choices there for you guys. But essentially, what you'll be able to do is connect your broker to Tykr. When you make trades in your broker, they automatically update in your Tykr portfolio tracker. All right. Well, thank you so much for joining. I got to jump here, top of the hour. Do go to Tykr and take a look at the top here, webinars, and get signed up for the next one. I'd love to see you guys in the next one. I think the next one is another live stock review on the 18th. So come ready with some stock ideas. And again, more hidden gems. I love those discussions. So again, Carl, good seeing you. Jeff, thanks for the comments. Really appreciate it. David, Suresh, guys, thank you all for joining, and we will talk to you soon. See ya.